Good morning, traders. Today is Monday, September 20th. My name is Charles, and this is the Pirate Traders live stream. Okay, well, first things first, I just want to start the morning today by mentioning that this sell-off is very, very bearish moving forward on a longer term basis over the next few weeks. But I want to remind everybody that we are day traders. Okay, and that on a day time frame, intraday today, the market doesn't have to keep selling off. It can attempt to backfill this gap that we've created in the overnight here. And so the market could push higher today. So even though looking at the longer term charts, obviously this is very, very bearish. We've clearly broken that 50. Even on the monthly, I was noticing this morning, we now have the cessation of one time framing higher on the monthly. So there's a lot of signals that the market might be looking for a larger pullback, but we cannot let those things distract us intraday today. Okay, we have to keep our mind focused on the fact that within the day today, the market could still trade higher. And you would assume they would at least try to backfill this gap. That there's going to be some traders that are going to wake up this morning and see this as a dip that is buyable. Okay. So I've left off all these old levels that are sitting here from a few months ago, just as a reminder that as the market was pushing higher, we left a lot of unrepaired weakness below, and we are now repairing it. Opening below all these levels will instantly repair all this weakness. So I remember when this was happening, when the market was pushing higher like this, we were all talking about how could the market push higher and leave all this unrepaired weakness, all these poor lows and weak references that it never had to return to. Well, there you go. Now you see why it did have to return and repair them eventually, as it always does. Okay, so what am I looking at this morning? Well, the first thing, obviously, is going to be the gap fill. So the gap is from the low of the day yesterday, which was a poor low, down to where the market is going to open. That's a massively big gap. Now, odds favor that we won't be able to fill that gap today, but that we will at least try. So the way the market reacts at the open here will give us a good indication of what's going on. If the market starts to push lower, finds support, and then passes back through the opening price, you could go long with that as an attempt to fill that gap. But it's not a trade you want to fall in love with, because at any point, the market can find resistance and then start to trade lower again. The gap doesn't have to fill. If that happens, if the market trades higher, tries to fill the gap and can't, and starts to trade low, that is a good short trade as what is called a gap and go scenario. Okay? So the way I'm looking at today and how to trade this is the gap is going to be the first thing that I'm focusing on right here at the open. Do we try to fill the gap, or do we immediately start to sell lower? Once either one of those scenarios has taken place, we've tried to fill the gap and failed, or we've just immediately started trading lower, I would go with the trend to the downside. Okay? If the gap starts to try to fill, I would go long with the attempt to fill the gap, because it is a very big gap and there's a lot of space to the upside. But I would be monitoring very closely for the market to find support. Find resistance. All right, let me start clearing out some of this old stuff. So again, all of this is repaired if we open below it. The overnight inventory was basically 100% net short, so we would expect a counter auction to the upside. Since we opened here, we would expect the market to push a little bit higher as a counter auction to that overnight. And again, it's buyable passing back through here on a very, very tight trade. Don't fall in love with it. Okay, internals obviously opening very bearish. So if you entered at that opening price, you can go ahead and move your stop above break even here. So this is what we're seeing now is that counter auction, right? We're absorbing that massive sell-off that we had in the overnight and attempting to fill the gap. If the market finds resistance in here, okay, and it can't get any higher, that is shortable as a gap and go. But as long as it's still trying to push higher, as long as it's still pulling down, finding support, taking another push up, pulling down, finding support, taking another push up, it is tradable to try to fill that gap. We left behind some very low volume nodes in here, right around that opening price, only 100 contracts. So that's likely to need to backfill. Great area to look for support if the market does pull back down into here. Also, if that happens, if the market pulls back into here, we note this is the first resistance to the upside. So if the market tries to push back up into it again and can't get above it, that's noteworthy as a potential failure to fill the gap. Okay, so this area is acting as resistance once again. So as we pull back down into this area around 57, we're looking for support to take another stab at that resistance. Okay, so this area up here at 62 still acting as resistance. Breaking through that would be bullish. But until then, it's starting to feel like it's a failure to fill the gap. Again, still acting as resistance here, this 62-ish level. Market's having a really hard time breaking through that. All right, there we go. So now that should act as support at a continued attempt to fill the gap here. So again, we got some low volume nodes here. As we start to get into some resistance, we should need to pull back down, backfill this. Only 200 contracts here, 200 here. And then we got the support in that 62 level where it was resistance. Okay, same as before. As we continue to push higher, this node, which was resistance at 67, should act as support. Okay, so now things are getting interesting, right? We had a bunch of buyers step in the counter auction, right? So that's people who were short in the overnight, taking profits, and then new buyers stepping in to those trades. And then we pushed our way right back up to the zero line on the ticks, okay, which is where to get above that zero line, we need more people buying than selling. Even if the market is pushing higher, if it's still below that zero line, there are still more people selling than buying. So we got some resistance right in there. So this may be where the market is starting to run out of buyers. There's not an exact level, but this node here should act as support since we had to work so hard to grind through it on the way up. If it can't, if we fail and go below the halfback, that would be bearish. Halfback is currently at 43.58. All right, the resistance continues here. The market cannot get more buyers than sellers. We're struggling to get back up there. Once again, getting below that halfback would get bearish. Once again, passing through that open would be even more bearish for further downside continuation as what we call a gap and go scenario, meaning the market is failing to fill this gap. Sellers continuing to pile on here. Okay, that last pullback to the halfback brought in some buyers, but can they get back through this resistance now around this 68 level? No, sir. This is the area these buyers need to step in. They need to get a good push and get above this node. If they can't, it's a gap and go, and we're looking at further downside continuation. It's crazy that it's been a half an hour of this volatility. There are a lot of participants taking bets here. Well, what does that matter, Charles? What does it matter that we're grinding around in this area nonstop, super fast all morning long? Well, it means we're building a lot of volume in both directions, right? There's a lot of people going long, a lot of people going short. So whichever way it breaks, if it breaks to the upside, we're going to squeeze these shorts that are piling on here. And if it breaks to the downside, we're going to squeeze out those longs. So wherever this sort of area that we're stuck in right now, this area here, wherever it breaks, it's likely to break with some force. So far, it feels like it wants to break to the downside. This area is the last chance the buyers have to get another push higher. If they can't hold this, we're going to get that pullback. Here they go. One more attempt. All right, well, as things have slowed down a bit, I can go back and look at the chat here. Good morning, RK Leon. Good to see you. Good morning, Mangala. Good to see you as well. Mediterra, good morning to you. Jose is here. Good to see you. Diane, welcome to you. Cine Matt is back with us. Good to see you. Ronald is here. Good morning. Marco, good to see you as well. Mangala says, namaste to all. Boy, it's not a day to be chill at this moment. The market is in a chaos mode. It's a high energy morning. Shubaho Deep, good morning to you. Welcome. Philip is here. Good to see you. Pavel back with us. Good morning. Amir is here. Good to see you. Naif is here. Good morning. Marco, I've made a good trade with the counter auction. Good for you, brother. Oh, my date is wrong on the headline. Thank you for the heads up. Design Now back with us. Good to see you. All right, so can this halfback hold right now? Can this B period low hold? If it breaks, they got nothing. The sellers are going to win. Couch, good morning. I remember that the last time we bounced off the 50 SMA mid-August, you mentioned that there were higher time frame players that were looking to get filled at that 50 SMA. 43.40. Today market bounced nicely off of there. Yeah, I don't know if it bounced off of there because those larger term time frame buyers bought there. My guess is they already took profits on those contracts. But right now, this feels like a momentum play, an attempt to fill the gap that will either succeed or fail. And right now, it's failing. Failing to fill a gap is bearish for further downside continuation. It's a sign that the sellers are in control of the market, which they have been for the last, 7 or 8 days, trading days. The sellers have been in control. Getting bearish here. All right, looking for further downside continuation. So now this area that was acting as support just now, where the buyers were stepping in just above the halfback here, should start to act as resistance on the next push back up. Trading Donkey, good morning. Looks like a wild one. Yes, it is. Rocket says like shooting fish in a barrel. Yeah, if you're on the right side of it. You can get shot too pretty quick though with this volatility. All the fishies are getting shot on both sides if they don't have wide stops. But of course, a wide stop takes some courage in this market. All right, Fausto went long for that counter auction. It's got to stop above break even. Good to hear. Thomas, do I have a video explaining the chart that I'm looking at? I don't, but I'll walk you through it in just a minute or two once the market settles a bit. Donkey's going to try to sit on his hands till Wednesday. Man, that's tough. Tell me you're not feeling that FOMO right now watching this volatility. Thinking, man, I could just scalp for a few ticks here or there. All right, so now does this act as resistance? This node that we were in before that acted as support? Maybe not. The buyers are stepping in. Dee's back with us. Good morning to you. Freddie is here. Good to see you. Captain Tiberius, good morning. Lewis is here. Good to see you. Raj back with us. Good morning. Jitten says rollover. Lewis managed 4K on the morning pop. Well, that's sick. James says tick is being stubborn. Well, it just broke. Arthur, good morning to you. Blessings, good morning to you. Marco is saying B is likely to be an inside bar. We're only 7 minutes into the time period, so let's wait and see. The amount of volatility, the way, the speed, the tempo that the market is pushing around here is what you would commonly expect on a massive gap, right? You would expect it, that's not a day where you expect chop, where you think the market's just going to grind up and down. That's where the market's going to pick a direction and just start going. So, if the buyers can keep it up, man, they can't. I say if the buyers could keep it up and they break out of this high, they could start to continue pushing higher. Like I said, there's a lot of traders on both sides in here. So a squeeze could happen either direction. Didn't get much to the downside. But I think grinding around in here for another 22 minutes seems unlikely to me. For those that are new to market profile, if we do have an inside bar, so the A period is this bar here. The B period is inside right here. So what we commonly look at is if the C, for example, were to start to print right now, whichever way it breaks that B period high or low, the market likely to continue that direction. But like I said, we got a long time for this B period to start trending one way or another. They don't have the sellers. I'm sorry, they don't have the buyers. Misspoke there. Good morning, Vitatutas. Sorry if I just totally skewered your name. Welcome. We're glad to have you. Please smash that like button, guys. If you don't mind, it really helps YouTube to know to send more people my way. Trying to break that 100 viewers number is becoming profoundly difficult. Got to get those likes in early in the day to make it happen. Thank you kindly. So there's not really many people wanting to buy this market anymore. They're running out here. The support is getting thin. So what happens when the people who've been buying over and over again, what happens when they start to get squeezed out of their trades? Okay, we touched that negative 1,000 again. Very bearish. Oh, Cindy Matt, thank you, man. Finally got my first official YouTuber style video out there. I was planning on, like, once I got to New York, I was like, I'm going to crank out like one a week. And it took me a long time to get started. But already learning from it, the average viewer is only watching for 4 minutes. So lesson is I got to make it shorter, sweeter, more to the point. But yeah, look out for more content like that moving forward. Core, I was half a point from getting filled. Would have been a 3-to-1 ratio for the win. I thought more risk because of the overnight range. Were you going to go long or short is the question. Blessings. If I could kindly do a video on the software. Yeah, for sure. I'm eventually going to do a whole course on it, like an in-depth, 10 lesson, but I can do a quick video that just explains the basics. Just to walk you through the basics right now. I mean, this isn't a great time to try to teach market profile because we got these crazy elongated profiles, but just so you know what you're looking at here. Basically, each letter that you see, that's called a TPO, a time price opportunity. And essentially what that is like a candlestick that represents 30 minutes, so like a 30-minute candlestick. The reason that you see two sets of them right next to each other is because what you see over here on the left, that's the profile collapsed together. So all the time periods lay on top of each other. And I have that over here on the left side. Okay, I have the collapsed profile over here on the left. And then over here is what's called the expanded profile, where you can see each 30-minute time period. The collapsed profile shows me the shape of the profile, and then the expanded one just lets me kind of see how the market is moving through the 30-minute by 30-minute period. The collapse profile is really the most powerful tool because it shows you the shape of the day's trade. And so what it lets you see is it lets you see what the market looks like on a three-dimensional scale, right? You can see where time, how much time the market spends in an area based on how many letters are going across. So like here you can see the market did not spend very much time right here, but it spent more time right here. So that's the first thing. It lets you see time. Obviously, it lets you see the price, right? Where on the price axis we're going. And then it lets you see volume in these nodes of volume over here, where the most volume traded per price level, right? So regular candlesticks, they show you volume down here, which shows you how much volume traded in that 15 minutes. But on the market profile, or this is called volume profile, it lets you see at each price level. We don't really care like what time frame the market traded volume. We care where it traded in terms of price level. Okay. All right. So this is that breakout to the downside. I think we're about to start one time framing lower here. Remember I said if this area where we were building up all this volume breaks, whichever direction it breaks, we're likely to get continuation because we got to squeeze out the trades. So in this case, squeeze out the buyers who went long in here. Going down would also be a continuation of the momentum we've had for the last week. It would also be a gap and go down. Value, this blue box that you see right here, that represents where 70% of the day's trade took place. And so right now, value is lower than yesterday. And if we go back up there, we can see that that volume or that value area was lower than the previous day as well. So that is a sign of a longer term trend. So you got value lower, you got a gap and go to the downside, and you got a potential long squeeze, or what we call a long liquidation here. So a lot of momentum building to the bearish side of things. I'm not quite ready to turn my chart down here bearish until we start one time framing lower. Calder, thank you so much. Appreciate it. I do the best I can. I just calls it like I sees it. NASDAQ getting very bearish here. Looks like they broke their low. Let's jump over and take a look at the NASDAQ. Yep, the NASDAQ is one time framing lower, which is bearish. Let me zoom back out for a second. So once again, same thing as the ES here. We got value lower. We got a gap and go lower. We now are one time framing lower. So all of this is very bearish. Back to the ES. What are the numbers which tick over while the price is at a certain level? Do you mean this yellow number over here? It just shows you where price currently is, as well as that little green box. It just shows you where the price currently is. And then if you're looking at these numbers over here on the left, that's the volume. So that's the number of contracts that are trading at that particular price level. You can see it both in actually just reading the numbers, and these little bars, these little candlesticks, just show you by size, where the most volume was traded. And then, of course, the colors, the red is where the highest 30% of volume trades. The pink is where the middle 40%. And the white is where the lowest 30% trades. So it's a really powerful tool for support and resistance, which we saw earlier today, right? This area was resistance, and then we pushed above it, and then it started to become support, and then this area was resistance, and then when this broke to the downside, this area was acting as resistance. So you can just kind of follow those highest nodes of volume. That's where the most traders are participating, and assume that those areas will act as support or resistance. Jitten, we are not one time framing lower yet. We will in about 2 seconds. And we are on the NQ. So if you guys don't know what these are over here, this is called the market internals. And the bottom two are called the tick charts. They show us the number of buyers versus the number of sellers on the individual indices, individual, the NASDAQ and the NYSE exchanges, I mean. And so this negative 1,000 level is a really important level because that's sort of the oversold level where you often get buyers that step in just because the market is becoming a little bit oversold. But that isn't bullish to me that we're bouncing off of that. What matters more to me is the fact that the ticks are trending lower and that they're staying stuck below the zero line, right? That is a sign that as time is passing, more and more sellers are piling on, which is bearish. I said I was going to wait for the cessation or for the one time framing lower to go bearish, but I'll get in there a little early. Doesn't feel like the buyers are ready to step in at this level. And again, it's about momentum. The momentum is to the downside. So you want to stick with a trend. You want to go in the direction of the trend. So in this case, go short until the trend is broken, which it clearly is not. Is this the big crash? I don't know. It doesn't, like, I was looking up the news this morning to try to figure out, like, why is this happening? And to me, it's not that big of a deal. It's like a company in China that's looking like it's going to default on its debt. You know, the conversations about taper, the conversations about debt ceiling, all those things I think could be reversed very quickly. So I don't necessarily think this is the larger, but I will say let me just pull up the longer term chart here. You know, going back, looking at the daily, the break, you know, we've been talking so much about that 50 simple moving average on the daily and what wonderful support it provides over and over again when we dip down to it here, 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 and here. So for a long time, it's been acting as great support, but that's not the case anymore, right? You just have to look at this chart here to see this time is different. We grinded on it, then broke through. And now with this gap lower, just because it's such a big gap, the probability of filling it is pretty low. And so we lose that argument that we've had of like every time we dip below, the next day we pull back above. Like we're not going to get that today. We're probably, well, I wouldn't say it's impossible, but it's very unlikely that we're going to get a push above that 50 today. So this longer term trend of the 50 acting as support is over, I think. So I think if we get back up to it, it's going to act as resistance this time around. So yeah, I mean, the momentum is fading on this market. We've also broken any sort of trend line that you could draw down here. We've broken that as well. And we can step back and look at that monthly. And we can see that we've had the cessation of one time framing on the monthly. This month got lower than the previous. So all of these are indications that this big, you know, momentum to the upside is wearing off. Now, how far do we have to pull back? Who knows, right? Maybe this is it. Maybe in the next day or two, we find support here and we start up again. Maybe we just got to pull down a little bit or a larger pullback. Maybe we need a massive pullback. Who knows? But this does feel like this uptrend has come to an end. And we need new buyers, new buyers to step in. Oh man, right when I went bearish. Here come the buyers. So again, I'm still going to remain bearish on the one-time framing lower. So I'm going to be looking for resistance right here in this node of volume. If they can get above the half back at 43.5750, then I might assume we're going to get some rotation in here. But as long as they find resistance in here, I assume this downtrend is intact. And we've got further downside continuation coming. Okay, so as we print the C period, we can also keep one time framing. One time framing just basically means that each 30-minute period continues to trend in the direction of the previous. So right now the B period was one time framing lower. So as long as the C period high stays below the B period high, the market is continuing that trend to the downside. So that's another indication we can keep an eye on here. Man, I can't believe this volatility just won't quit. There's some dip buyers in here. So again, if we get above the half back here and spend a little time above there, I would think maybe, okay, we're going to start rotating in this range, grinding around in here. But as long as we stay below that, I think we got further downside continuation ahead. Donkey, excess leads to balance will stay at this price for the next 6 months. Boy, I sure hope not. Now, I think this market is a little more used to volatility. They'll push it around. We'll get however much of a pullback we need, and then we'll V-shape back out of it again. But intraday, for the moment, the trend is to the downside. All right, guys, and with that, I shall bid you farewell. I'm going to switch on over to the private stream for Brigade members. If you're not a member, there's a link in the description. You can join. It's just $10 a month, and you get to watch the live streams all day, every day. I always say I feel like within a month, I'll say at least one thing that'll make you $10 or prevent you from losing it. So it seems like a pretty fair deal from where I'm sitting. And we'd love to have new members. So I'm going to switch over to that stream. If you're in the Brigade, I'll be sending out the email again today with a link there. Or you can give me about 10 minutes and the link should be live on the website. All right, guys. Thank you so much. And we will see you here tomorrow morning.